Live. Go ahead, buddy. Go ahead. Go ahead.
Welcome to the live stream.
Yay. You want to ring your opening bell? All right. Awesome. Thanks, buddy. Super cool. So welcome to the Independent Investor Channel. I've got a special guest, Lydia Santiago. Most of the folks that tune into my channel know that she's a featured channel, and she's taken the time out of her Saturday evening to come on and do a collaboration. And Lydia, you want to introduce yourself for those folks out there who don't know who you are?
Yes, hi, my name is Lydia. I have my own channel. Pretty much what I do on my channel is I document everything I'm doing with my investment journey. So then everyone can see how to start a portfolio from scratch and build it to something great. So yeah, that's pretty much what I do.
Super cool. Thank you so much for taking the time for doing this. I was just telling you, we were talking before we went live tonight, how much more fun this is. It's a little bit less one-sided because we basically have two experienced investors. So you guys will benefit from that, certainly. For those of you who are making your way into the live stream, just a couple of points. If you want to ask a direct question to either myself or Lydia, just denote that for sure in the group discussion. I'll be acknowledging, like I always do, all the content creators that have made their way in, but certainly I really hope we have some folks that are making their way to our community for the first time. For those that don't know, my name is Ryan. I run the Independent Investor Channel. I started in New York City about 3 years ago. Now we are hailing from Virginia Beach, and I know Lydia is representing from the great state of California. So cool. We were just having an awesome discussion beforehand, and you know, we've got some questions to get to, but honestly, the focus of the stream will be on the questions that are coming through. Man, we're here to help you guys in whatever questions you might have. It's an interesting time to be an investor, and Lydia's been through a few changes here just recently. You want to fill the group in on kind of what you're doing with the brokerage shakeup? It's really interesting.
Yes. So when I first started investing, what brought me into the stock market was Robinhood. So I had some sense of loyalty to Robinhood. Eventually, you know, I cashed out, but I am going to restart my portfolio. And when I was looking at what I was doing, Robinhood didn't have a lot of the things I was looking for brokerage that could give me so many features. I decided to go with TD Ameritrade. So right now I'm currently trying to put my money into TD Ameritrade. I have had a little bit of a struggle with Robinhood. First, they rejected my transfer. I wanted to transfer all my shares to TD Ameritrade, and they just pretty much made excuses. So since my portfolio is fairly small, I decided to cash it out. But they are holding my money even longer, so I probably won't have my funds available until next Friday. Which is okay. I'm going to be adding money on next Friday either way to my portfolio. But I'm just really happy, you know, that TD Ameritrade and a lot of the bigger brokerages are now not charging commission fees. And that's something that I think we want to thank Robinhood for, because they they kind of made other huge brokerages not charge those commission fees. So I am thankful to Robinhood for, you know, getting me into the stock market and to make all those big players not charge any commissions. So I'm very excited about TD Ameritrade. There's so much on there that you can learn. It has so many features, education. It's just great for new investors, experienced investors, even traders. It just has so much to offer. So I'm just so excited to start building my portfolio there.
Yeah, I just think those testimonials are just worth their weight in gold. I mean, folks who can come into a community like this and just sit back for a second and just kind of soak in the information. Some of it you're going to know, but other things you're not going to know because the landscape is changing so drastically. And I think the irony in the whole thing is us as individual investors are the beneficiaries of those changes. Like you were saying, I mean, Robinhood was one of those disruptive apps when it came out. And I think we were talking before the stream, and you had talked about Robinhood playing kind of a pivotal role in getting you interested in investing. I think it did that for a lot of people.
Yeah, you know what? I actually see my brother here, Julian Santiago. He was the one who introduced me to Robinhood,
It's
so I
a
want to thank him. He was the one who made me become obsessed with stocks. So, yeah, Robinhood has definitely changed a lot of things in the investing environment, and it's super exciting to be an investor right now.
think you know too, Lydia, a lot of the misconceptions that a lot of new investors have is the barriers to entry. You know, it's too difficult. I don't know what I'm doing. It's too hard. There's too many options. None of that really exists if you're just willing to pay attention, right?
Hmm.
And just open your mind a little bit to what's out there. I can reach back into the archives when I started investing a long time ago, and I'm so excited for especially young folks. I just want to make sure that the young folks appreciate what wasn't available when I started investing, because now, my goodness, you know, you've got it right in the palm of your hand, the power of monitoring your accounts and being more engaged. You know,
Yeah.
you know, and I think that's just one of the exciting things about people like me and you who like to be a little bit more hands-on.
Hmm. Hmm. Exactly.
Um,
That's what I'm gonna use TD Ameritrade for, to be more hands-on. Like, I love M1 Finance, I love the drip feature and everything, and it's kind of like a set it and forget it type of brokerage, which is great. But I like being more involved with the stock market, so that's why I don't mind buying full shares with TD Ameritrade, and then I can just see what my brain did for my future wealth.
I think we were talking, and then for you guys that aren't familiar with Lydia's channel, I put the link in the description for you guys. I think I put it everywhere I posted on social media. So just check it out. If you're new to her message, you definitely want to kick over. Take you a few seconds, guys. The information is invaluable. And to offer a testimonial to folks just with the sheer intent of helping people is straight up, it's legit. It's legit. I pulled the first comment. I threw it up there in the stream for you, Lydia, if you want to take. And it's fitting that Gen X Dividend Investor, he's one of my faves. So I went ahead and threw that up there if you want to take this.
Yeah, so he's asking, my question for Lydia is, why are you so passionate about investing in stocks, but so many others aren't? Well, for me, the reason why I love the stock market is because there's always so much to learn there. And I am the type of person that I like something and I want to learn everything about it. And then once I learn everything, I move on. But with stocks, you continue to learn and you continue to grow. And there's so many perspectives of other people that about investing. And I really love the beauty of compound interest and just being able to make smart choices and invest in yourself. And I don't know, just pretty much I can give that to my daughter and I can teach her about stocks. And
Absolutely.
it's just something that's not talked about a lot. And it's such an amazing thing that you can build so much growth from dividends and no one talks about it. So it's just something I'm really passionate about because I think it's a great thing that's out there and it's available for anyone and everyone once you turn 18. Even when you're young, you can have a custodial account and then have your kids learn about that. And I think it's super important. And not just that, when I started learning about stocks, it made me start looking at my finances and how I was managing my money. So it started making me think of ways to become financially free and just looking at everything and seeing that it is possible. So I'm very passionate because I just love the opportunity it provides to everyone, to build wealth and to not work the 9 to 5, but I probably still always will work the 9 to 5. I'm a little bit of an
Yeah,
workaholic.
people like us typically don't stop working.
Mm-hmm.
All right. I think you had mentioned something cool as well. You know, we were catching up a little bit off before we went on the live stream, and you were talking about not ever having a financial planner in your life. You've always done it on your own. Do you feel like the landscape is conducive to that type of activity? Can anybody learn this, or where would you recommend that people go for some of the resources that you've learned on your own? Can you comment on that a little bit?
Yeah, so there is a lot of resources online. There's a lot of free education online that you can learn from. So I think just going online and taking the time to research and kind of figure out what your goals are and what you want to do with the stock market. I pretty much learned with trial and error too. I made some mistakes. I learned not to be impulsive. I learned to really do my homework on what I'm putting my money into. It's not a game. It's not a gambling platform, but anyone can do it. And if you're afraid and you really don't know what to put your money into, there's always the stock indexes. And you can always just observe the stock indexes and see how they're doing. And then once you feel a little bit more brave, then you can, start investing in individual stocks. And just learn as you go. Like, no one's going to be perfect. Some people think that, they can't make mistakes in the stock market. You're going to make mistakes and you will see your money go down. And it's just part of the learning process. But I think anyone can do it. And I hope more females get involved with the stock market. I see a lot of girls don't care about it. They prefer, I think, to save more than to invest their money, but it's really an investment towards yourself. So I really, really believe anyone can do it. You can start small. The hardest part, in my opinion, to start investing is to start investing, to pull the trigger and just invest in the stock market. That's one of the hardest parts. And then after, you can learn as you go. And there's a lot of people like you and I that are more than happy to help. And there's even brokerages like TD Ameritrade has their own facilities that you can go to, and they'll give you free advice and they'll guide you. So there's just so much out there that can help you.
I'm interested in your answer to this question. You see it on the screen. How many
Thank
people?
you, Lydia.
Yeah.
How many people at your work have you got into investing? I've gotten a lot of people into investing. At this particular job, I've only gotten maybe a handful, but I've gotten them very excited about stocks. Like if I see them on my break or something, I start talking. They already know, like, oh, Lydia, what's the stock market doing today? What are you doing with the stock market? So I had them, what I tell them is you can look at Robinhood. You don't have to use my link, but you can get a free share. And then that way you can look at how the stock market acts towards stocks, and you can look and see if you like it or not. But this other place, I used to train about 70 people. So I kind of forced everyone to sign up for Robinhood, but a lot of them started investing, and even till now, they make fun of me of Roku. I always talked about Roku. So I've gotten maybe like 80 people to start investing. So I'm really, really proud of that and really happy about that. And some of them have been girls and boys. Everything.
Those are the kinds of questions I like. So that was from Hidden Freedom Investing, who's another channel creator. I've got Investing with Aaron here in the group. I've got Travis Williams in the group. Of course, Gen X dividend investors made their way in, and I see a bunch of loyal subscribers. I've got Dave with Average Joe Investing. Lydia, we were talking before we came on the live stream. Some of these old school folks, man, have been really with me since the beginning. And we were talking about those sticky audiences. Do you want a channel with 20,000 subscribers, or do you want with 100 or above? And I think that's the cool thing about YouTube is the unlimited upside potential of this gig. That's what kind of is exciting about it. And, you were taking a little bit of a break, you were telling me, from the channel. And I would imagine it kind of drew you back a little bit. Can you talk about that a little bit?
Yeah. So when I was looking at, every time I would invest into my portfolio, I was really happy that I was building it up and it was doing really well. It did really well. But in the back of my mind, and I always felt very guilty that I had this huge debt and I wasn't putting any money. Well, I was putting money into my debt and into my principal, but it wasn't going down fast enough. So I had to just kind of think, okay, the market just hit all-time highs. I think right now would probably be a good time to make that decision to just sell my shares. And it hurt me a lot. It made me very sad. I didn't realize it was going to hit me that hard, but I sold everything out and put it towards my truck. I now only owe about $1,700. And what I said to myself is, okay, once I pay off my truck, I'm going to be able to put that money I was putting towards my principal into my investments. And then I'll be it was more of a mental thing for me. I just wanted to feel that I just don't have any more debt. I can fully concentrate on this and I don't have any distractions, and I don't feel bad about putting money into the stock market, because the whole time I felt really bad. But I was also very passionate about stocks and showing other people my journey on what I was doing. And a lot of people have been part of that journey, and I'm so grateful for everyone who's been following me. Like even the people who were following me before are still there. They've been loyal to me, and that means a lot to me. So yeah, that was the major reason why I left the stock market. And some people, tell me like, why did you do that? That was a little bit dumb. Like your interest rate wasn't that high. You could have paid it off either way. But it was just more of a personal decision for me. I just wanted to have it all completely gone. And it was a huge debt. And now I'm going to be debt free. And I'm one step closer to becoming financially free. I don't want to be a slave to the lender, as Mr. Ramsey says.
Exactly. I think it's worth noting that a couple similarities between me and you is that we both have professions. We
Mhm,
don't do YouTube for a living. This is a
mhm,
little bit kind of a side hustle. I don't want to speak for you, but that's absolutely, I'm very, very cautious of my time. We spoke a little bit about it before, and I've had a ton of people that I don't disclose over my channel that have reached out to me behind the curtain, and I've helped and done that. But as far as branching off and doing YouTube full time, I know JMac Investing, who I believe is in the group. I saw him pop in, I think, did a collaboration this Wednesday with Dennis from True Financials. And Dennis had talked about breaking away from the regular job, and he's actually going full speed in social media marketing. What do you think about that in relation to your situation? Do you ever see this being anything more than what it is? And I don't want to say that it's a side hustle, but that's the way I chalk it up for me. Can you talk a little bit about that? What it
Sure,
means?
yeah. So for me, I am not in YouTube for making it a career. I'm making it more to build a community and for me to have people to talk about my passion, which is stocks. I think even if one day I became a millionaire, I would still work. The type of work I do, I really love. It helps a lot of people. So I don't think that's my second passion. One of my passions, it's stocks and law. So I think for me, even if my YouTube becomes very successful, I will still work. I love the type of work I do, and I think it's just the type of person I am. It's great to get some income from YouTube. Right now, it's not really huge, but I'm okay with that. I don't do it necessarily for the money. I do it more for me. It's more of a diary for me. I get to vent out what I feel about the stock market. I get to show everyone like what I'm going through. And it's just, I think would be really cool for me to look back 10 years from now and just to see how I've grown as an investor and what journey I went through. And then everyone can see how I did it and how a normal person can just do that.
Think
Yeah.
Gen X dividend investor. That's kind of along the lines. I typically don't do any type of live stream because Gen X is in almost every single live stream feed, whatever you guys call it nowadays. But he builds his videos the same way to leave somewhat of a legacy. And if you watch his intro video on his justification for YouTube, it really, really stuck out to me as being special, along the not the generational wealth, but the generational education. Like what was my mom thinking when they took these investments, or what was my dad thinking when they took these investments? I just think that's a beautiful thing, man. I get a little bit emotional thinking about it, to be honest with you, because we have the power to do that nowadays. We're
Yeah.
doing all this work behind
Hmm.
the scenes, and we get to kind of leave that legacy a little bit, and certainly that's in line with my intent as well. So pretty cool stuff. I really appreciate that.
Yeah,
uh,
that's great. I know I already have my 9-year-old on board with the plan of if something ever happens to me, you got to keep this going. You got to keep investing, keep putting money into it. And then, yeah, because I want to be able to give her this portfolio. This is more for like my family. I want to build generational wealth because I feel like right now everyone's stuck on that 9 to 5 and they don't get to really explore their passion. And I want either her or her family to be able to not worry about finances and they can just go ahead and do whatever they're passionate about.
you think there's a little bit of value in working for it? How do you feel about that? Because I guess my concern personally is just
Mhm.
handing my children a bunch of, I've taken a hard road. I'm pretty open with the road I've taken, being fishing and living the ocean life for a long time, and then, being enlisted in the military. So I've chosen a couple pretty I've had my butt kicked a few times by life, certainly with the profession, and I wouldn't have traded anything for any other way. But do you ever, how do we teach these kids appreciation, I guess,
Yeah, that is one of my concerns, and that's why I have my M1 account. I made her one just so she can learn off of it, but it's not a custodial account because she has to show me that she is appreciative and that she has worked hard in order for me to pass it on to her. So there are going to be contingencies. I'm not just going to hand it to her because I don't want her to also be like, oh, my mom's working super hard, she's going to give me this when she dies or whatever. I don't have to work as hard. She has to prove to me that she's going to work hard still, and then that's just something I'm going to be giving to her. But that is one of my concerns. I don't want them to feel entitled or for them to slack off in the world just because they see that I'm going to give them this. So yeah, she has to kind of prove herself to me. I'm not just going to hand it to her.
Yeah, that's pretty awesome. Good stuff. I kind of want to jump into I have a group of questions I sent over to you, and they're pretty cool.
Mhm.
But I thought I would get your perspective on the YouTube opportunity. Where do you see the channel in 5 years or longer? Like, do you have any premonition about where you could go, the power of YouTube, and how people, obviously you're growing the channel. You're just button up against, you'll be at 2,000 subscribers pretty quick. And it's interesting because I've been there, done that. I know how hard it is to grind away when
Mhm.
you're starting a channel. It can be, it can test your perseverance. I don't want to speak for you, but where do you see this thing going,
I do think I have an opportunity on YouTube, especially because there aren't many girl investors. So I do think I have, in a sense, a little bit of an upper hand with that. I do have to learn a lot more things, like with editing and just not being afraid of showing my face. And just kind of, so I think I do have a lot of potential for right now. I am super busy and my life is very hectic. So I haven't been fully concentrating on YouTube as much as I should. But I do think at some point I should start, building more quality content, just because people are so loyal to the channel. And I do think it has a lot of potential. But in 5 years, I'm just really excited for people to see how I built my portfolio. That's what I'm mostly focused about, is just documenting my entire journey and for people to learn from me. That's my main focus. If I end up getting revenue from it and it continues to grow, that's just a plus to me. So that's kind of my take on that.
I would say, if you don't mind, I will give
Mhm.
you three other compliments. You're right about the relatability and really talking to other female investors, but don't throw the youth category in there as well. I think sometimes it's difficult because I was there. When I was 19, I didn't want to listen to somebody who was, 40, 50-year-old old geezer. What the heck are they talking about? But I
Mhm.
think the relatability is right. And if they can't hear it from somebody like me and get excited, or any of the other featured channels in this group that care just as deeply about investing, if they make their way to your channel and they're able to get that little bit of excitement to be like, dang, I relate with this person. And
Mhm.
sometimes it transcends investing. Sometimes it's beyond the stocks. What we always want to talk about, the nuts and bolts of the portfolio. I talk about that all the time, but I think there's a little bit more of a human interaction. And with the number of YouTube channels on right now, I think it's definitely saturated from when I started.
Mhm.
However, there's a lot of need out there for people making their way to social media and clicking in the YouTube search, how to, you know?
Yeah. And a lot of people have told me that I talk like a normal person. I'm not trying to sound super smart. I admit my mistakes and I tell them, I'm still learning, I'm still this. And I'm always super transparent. And honestly, like, the people who've been part of my channel and my journey have been some of the people who've helped me a lot, that they taught me, about PE ratios, what are different verbiage in the stock world. So they've helped me a lot with my investment journey, and I really like that they can relate to me, and I'm not just someone trying to sound smart so people can listen to me, or so I can grow my subscriber base. Like, that's not what I'm doing. So I really like that they can relate to me. That's what I like the most about my channel, is that I get to talk to people about stocks. Like, I don't get to do that in real life. So that's what I love about YouTube. I missed it so much when I left for a little bit. for
Yeah,
that reason.
I found myself really missing it as well. I wasn't sure how much of an impact I guess it would have on me. And it really wasn't making videos day in and day out is kind of a grind, but it's
Mhm.
honestly the interactions for me. I've had some pretty interesting interactions with some people over the last 3 years, that of which I typically don't disclose just
Mhm.
for anonymity. But those are the special little things, the little payments that we get, and as the channel grows, the monetary compensation increases, right? But I
Mhm.
think the strength of some of those relationships that we're able to facilitate, I get to meet new people. I've got Matt Money who just popped in. He's one of those new folks that I was just introduced to, to a couple months ago. When would we ever have the opportunity to reach beyond, borders in this case, and not only reach different people from within the US, but also abroad? It's
Mhm.
very powerful, you know?
Yeah. Yeah, I get some UK viewers, I get some Canadian viewers, so I think that's super cool. That's what it is so amazing about YouTube is you can reach so many people, and then you can do it from your home. Just post your videos and you get to talk to everyone. And they have different perspectives about the stock market too, you know?
Yeah,
So that's
exactly.
super cool.
So I threw up on the screen Gen X dividend investors, probably one of the most revered as far as I'm concerned with regard to research and stock. So he was gracious enough to throw some of the investing websites. Finviz out of the group there is what I use. But Victor Hernandez threw in here, what sites do you guys use for research? I get the best research personally off of Merrill, which is my investing platform, Lydia. And we were talking before the stream tonight about how much you're going to enjoy having TD Ameritrade. You're really going to sink your teeth into all those services. And I think you're going to get used to a little bit more of a full service suite of products. But I do, just for the group, want to offer the Vanguard's website is a good one. I invest in passive. I know I haven't even asked you. I haven't even really caught up in the portfolio makeup, but you're more of a single stock investor at this point, right?
Yeah.
So I think with my age and tolerance, I typically try to have a good, healthy mix of both. That's just in line with my risk profile. But I love the Vanguard listing of ETFs. That's kind of what I consider the shopping mall. And then the root of the independent investor channel is really rooted in the Trading Academy website. If you go to the Trading Academy, it's in the link of every description and every one of my videos. However many people are actually searching that out is the verdict is still out. Do is run the compounding calculators and take into account any fee structure that is assessed through expense ratio, brokerage fees, dividend reinvestment fees, dollar cost average fees, and they can lump that together and come up with a scenario and say, if I had 2% fees over the account, how would that affect that money over the long term?
Mhm.
That's really important. And again, I told you before we came live to aim at that one person maybe who comes on to our collaboration tonight and is like, I'm just looking for some good information online to find. Those are a couple that I would point to first, in addition to what Gen X Dividend Investor threw out there. Do you have any others that you can add?
Yeah, when I first started, I would look at the NASDAQ, but TD Ameritrade has really good resources. Like there's a lot of information on there. So I think from now on, I'm going to use TD Ameritrade. And then there's so much education on there too. So I think I'm just going to be watching, doing my research off TD Ameritrade. But I used to use NASDAQ to look at like dividend history and just different ratios. And FinBiz, I like the map that it has because then you can see overall like how the whole stock market is doing, and you can filter out by like P ratio how it's performed in the last year. So if you're more of a visual learner, I think FinViz would help a lot of people. I like to read and watch videos and things like that. So that's why I'm now going to use TD Ameritrade.
I think the surprising part that you had told me during the pre-live stream is that, again, you've done all this on your own, whereas I've had the opportunity to sit with 4 financial planners, and I'd be a hypocrite if I told the audience that I didn't glean some value from that. you look back and you just don't know squat. You're sitting across from folks who, and they taught me a lot about investing up until that breakaway point, that moment where I was like, and the last meeting we had, he sat across from me and it was like, Ryan, you don't need this anymore. You need to go out on your own and do your own thing. And that was kind of my moment, and then I didn't know about self-directed investing when I broke away. I knew I needed to find something different. Ironically, I was introduced to Merrill Edge at the time. They had just bought Merrill Lynch, Bank of America, and I received a cold call from Arizona. It was one of those calls that you never take, Lydia. You get when you look at and you're like, okay, I'm not even answering that, but I did.
Get a lot of those.
Exactly. But it's just funny how things work out, and I think for myself, in reflection, if we can maybe circumvent some of those mistakes, I guess, for lack of better terms, for new investors, I think we're winning the battle, because I do think we can further define the path from a non-investor to an investor, with the group collaborating and the community ideas that we have. I think it's so legit. I really do. So.
Yeah. And I made a lot of mistakes when I first started. And like one of the reasons why I learned on my own, it wasn't really by choice. It's just I didn't really know there was other resources out there. And just going to another brokerage and the commission fees that they charged and just that they charge for their help, that's what kind of, I'm like, well, I can't do that right now. So that's why I just kind of learned on my own. And a lot of the people on my channel actually helped me a lot. They were a lot of my teachers. You've helped me a lot. You're always very informational in all your live streams. And I just kind of learned with trial and error. Like I learned, don't invest in IPOs. I learned my lesson. Don't invest in hype.
Uber's looking pretty good right here.
Huh? Uber's
looking pretty good right here.
There's some exceptions. There are some exceptions. Roku.
You didn't hear that from me. I'm not investing in Uber right now. Just don't hold me to that, okay?
You can have your fun. There's some, like, Roku is my huge speculative position. Like I
like Roku.
Yeah, Roku. It's been crazy. Roku taught me a lot. It taught me how to control my emotions. That's like a huge thing in the stock market. You have to not be emotionally invested, because it can make you do impulsive choices.
And it's hard because we're always taught to react to every inject that we get in life, and then we come across this investing thing, and everybody's telling you there's no emotion in investing, but you want to approach it in the exact same way that you approach everything else in your life.
Yeah. I had a little bit of an advantage with the emotional part just because I work in the legal world. So you have to put your emotions to the side and you have to work on logic. You can't do things emotionally. Like, you can see someone hurt really bad and you want to help them and do all kinds of things impulsively and get angry and yell at whoever, but you can't do that because it's not going to help the individual. So you have to put your emotions to the side. So I think that helped me too a lot with my putting my emotions to the side and thinking more logically. But it is very hard to look at your money that you work so hard for just tank. And then you're just watching it, and then people tell you don't get emotional, don't worry about it. It's really hard to do. And I had gotten emotional before. Like I've invested in hype before, like when the 3 Chinese stocks went IPO, Huya, Billy, and IQ, and I followed the crowd and I just put money in there, and it was high because I got FOMO, fear of missing out, and that tanked so bad. And I just said, you know what, I have to cash out, take a loss, because I don't know anything about these companies, and I made a mistake, and I have to admit I made a mistake. And that was one of my biggest mistakes in the stock market, investing in hype. Investing in something I didn't know, didn't do any research, and it tanked, and I had to admit I made a mistake.
Yeah, but you know what the irony is in what you just said, Lydia? The thing about it is it takes an awful lot of courage for somebody to look in the mirror and say, I've made a mistake, let alone to come onto social media and say, hey, audience, I've made a mistake. And I think there's more to that for people not being so rigid in their approach, not being so critical over their own capability. You know, admit it when you make a bad trade, and you're not ever going to avoid them. I mean, I know my bads from this year. Kraft Heinz food was a garbage offering for me. I mean, it was really bad. AT&T could have been a bad trade for me, but I held true and I turned it into something good.
Yeah.
And then General Electric, that everybody knows, and I do. You wear those on your sleeve when you're in social media, and that's part of the risk, I guess, that you put out there. But I do want to acknowledge the amount of courage that it takes to come on and say, hey, I might have made a mistake here. Don't, maybe it's something you might want to avoid.
Yeah. 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 And I did do a video saying, I made a mistake. I had to sell these. It was the wrong choice. And I had to admit it. I'm not perfect. I'm going to make mistakes. And I just hope you guys learn from my mistakes. Don't invest in something you don't know. And just because everyone's talking about, always do your research. Always do your homework. That's like the most important thing.
Awesome.
Well, one of the most.
Somebody decided to mix it up on a Saturday night and ask us about taxes. So I will keep it short because it's not my favorite topic. I will say one of two things. The first is that I do my own taxes. I use TurboTax. I like the video game aspect. It's like kind of a casino, up in the top left corner. It's cool, but now I have introduced the business aspect with the Cornerstone Capital Solutions LLC. Independent investor channel makes things a little bit more interesting for me. But we're in that phase right now of business building. And Lydia, I approach this project the same way I approach really anything in life, from a builder's perspective. So I haven't realized 1 single cent of profit out of the independent investor channel. It all goes toward other assets. I'm looking to increase the quality of the equipment to the channel, the lighting, hopefully, because I've got about 1, 2, 3, 4, 5 lights, some LED stuff. It makes a big difference, and it draws me back to some really cool advice I got when I first started the channel. I had a channel creator come on, had like 1.5 million. It was practical psychology. I don't know if it rings a bell with you, but wrote me a really long email and was like, Ryan, you've got a big heart, but here's what you need to improve on the channel, and was constructively critical of my gig. And I've always remembered that. I didn't look at it like, whoa, wow, really? But it had to do with quality of lighting, delivery and message and editing, which I don't do. I'm still holding out on that. I will someday, but also the quality of the sound. Which for the audience, I've improved the sound quality. It's on its way. What I'm talking to you on now is the mic that I really enjoy. It's a good one. But anyway, it's fun. It's fun when you can deliver content and eliminate some of that. We were talking a little bit before we came live about hate on YouTube. Want to talk a little bit about your tough skin on YouTube and how you deal with it?
Yeah, my advice was, if someone has the time to go to your video and leave a rude comment or thumbs down, I don't mind thumbs down, by the way, then you should take it as a compliment, because that person, you're so important to that individual that they take time out of your day to go to each of your videos to either give you a thumbs down or speak negative to you. There's something that they envy about you. So I just said, if they are rude to you or if they give you thumbs down, it doesn't matter. It's just take it as a compliment. But the internet's mean. They say mean things. They've said mean things to me. And I just laugh at it, honestly. I'm just like, wow, this person really cares about me. It doesn't make me feel bad if they say negative things to me.
Yeah,
That's just how I take it.
This has been something that I've had to get kind of used to, because I do take things personally, and I've listened to, the folks that I owe a lot of respect for, and thank you. Ryan Scribner helped me out when he had, very little subscriber. Remember when he was just started out, taking me on a couple collaborations. It's probably helped grow my channel and get the message out there to more people, honestly. But it's taken me a little bit longer, even though I've had some folks take me under their wing and be like, Ryan, let it go,
Yeah.
But I don't do that. I don't do that to others. I've asked some piercing questions of some channel creators, but here's my piece on that. I expect a little bit more from channel creators. I do. I don't expect any discipline when it comes to consumers of content. If they want to leave hate, they can. That's fine. I've come accustomed to that. But channel creators, that's a little bit different, where I've offered a little bit of constructive, hey, what do you think about this? What are you doing? What was your thought here? And then it just kind of engages in a dialogue. I know J Mac got into it right when he started YouTube. That was interesting. I was like, no, Jason, don't do it. But it seemed like he enjoyed it. So I guess it's all in the eye of the beholder, how you take the criticism a little bit and roll on it. I've had to always come back to my vision and what I want through the channel, and who my focus needs to be on. And that's why I'm so open with, look, if you're not into the message, you can go find somebody else. That's totally fine. I'm not wasting my time to get through to somebody that I know in my heart is probably not going to have the capability to succeed in the stock market. Could they get involved? Yeah, anybody can get involved, Lydia. You know that. But success on the market, that's a little bit different.
Yeah, that's very true.
I mean,
anyone can get involved.
I just think it takes a little bit of preparation and acknowledgement to your own deficiencies, not to get scared out of the market when you make that first, inevitable mistake in the market, and just stay true to the course. So it kind of brings me back, and I was going to go off script because that's the way I do in live streams anyway, but
this is fun.
I know it is. And with the current condition of the market, you had hit me up on the live stream on Friday, and you were kind of alluding to, what do you think, Ryan? What's your pulse? What should I do? Do we need to be investing whole hog right now? Is that the approach that we're taking? Is the market just going to continue to cruise up? What's your thoughts on that to posture for maybe new investors or investors that have been around for a while? What's your comment on that?
So I did mention it does seem a little bit scary to be investing at these levels, but for me, my goal is to have a certain amount of companies that I'm going to do dollar cost averaging. So let's say if I start investing now, I know it might be a little more expensive than it might be maybe a year from now, or it might go up. I don't know what the market's going to do. I feel like everyone says the stock market's going to crash. And since I started investing, they've been saying that, and it has been going up and up and up. I don't know what it's going to do, but I do know what my goals are. So I'm going to just get into the market every 2 weeks. I'm going to be putting money in. I'm going to be adding to my positions. And my main focus is going to be to build those positions. So I think, it depends what you want to do with the market. Are you going to be there long term? Do you want to do capital appreciation and swing trade? I don't know what you want to do. So it just kind of depends what your goals are. It does seem a little intimidating to start investing now, but if you're going to be in it in the long term, you're probably going to laugh that you were scared to invest in Visa at this number, and then later on it's like 250 or something. Like when I first got a share of Visa, it was at 119, and I thought it was too high because it was near all-time
that was after the split, mind you. I mean, they had just they had just done a 2-to-1 split. I owned it before that. So it split at 150 the last time, just a few years back. And it's done this run up all the way marching toward 200. I just think Visa is a phenomenal transaction business.
Yeah.
I had a personal experience just a couple weeks ago with PayPal, and I was so pissed. I should have recorded the conversation that I had with them actually and put it on YouTube. I threatened that I was going to do that actually because they just went through a changeover in their fee structure, and you got to be kind of careful with the payments transfer. So anybody out there, there's your public service announcement for the evening. And I won't invest in the company anymore. I'm good. Visa's making me slowly rich. I was just mentioning that American Express is one of those Dow components that I don't invest in as of yet. It's probably in the Gen X dividend investor portfolio, but we'll see. I was thinking Kimberly Clark, and he got me on that one. That was pretty cool. That's have you checked out any of his content by chance?
Yeah, I was watching his Kimberly Clark video earlier today.
Rock on. That's really cool.
Yeah.
Really cool. I've learned so much. It's amazing in 3 years if I could just bunch together all the knowledge I've gained from the YouTube community. you know what I mean, awareness to these brokers that we deal with, can
Mhm.
speak and intelligently about choosing our options. I just think that's so legit, you
Yeah.
know?
It's
And
really valuable because a lot of people don't know how these brokerages look like, what they offer, and then us giving that to them and just giving them our perspective. Like they shouldn't make their choices based on what we think, but I think it's good to give them that information. That's why I'm super transparent on what I do. Like I think I'm too transparent. Sometimes I'm like, okay, guys, I'm sick of Robinhood, moving to TD Ameritrade, and I just show everyone because I'm a normal person. I do have emotions, and I want to that's what I'm doing. And I tell them why I'm doing things and my logic. Maybe someone else has a different perspective, and that's okay. It's just what works for me. So,
for
yeah.
sure. Yeah, for sure. This is a popular question that I want to refer to, and I think you've kind of alluded to it, but maybe you'll catch me off guard. What's your best investment? And conversely, what's your worst investment that you can remember making?
Yeah.
Yeah.
My best investment, and I think I actually did it when I first started investing, is Amazon. I had bought Amazon at $1,100 and I cashed out at maybe $1,800. And that was my first real investment I ever did. And it was because I wanted to invest in something I understood, and I used to work at Amazon. So I understood that it was growing like a cancer and I just was familiar with it. So I decided to pull the trigger and buy Amazon instead of Google. Both are great companies. And I was super surprised how high it went. And my worst investment were the ones I mentioned earlier, the the Chinese stocks that I invested in, IQ, Huya, Billy, and even Neo. Well, Neo I didn't really have too much of a loss, but those other ones I had I think over 50% loss, and I put in maybe $500, so it wasn't devastating, but it was still a large a good amount of money, you know. So that's what I would say are my best. My also Roku, I bought Roku when it IPO'd at 20 something dollars, and then I eventually sold it when it was at 67. Now it's at like 160, which is insane. But probably like the best picks I've ever made are probably going to be Roku and Amazon. And then, yeah, worst ones are where those Chinese companies. No hate on Chinese investors, the ones that like Chinese companies, but
Yeah.
it's just not for me.
Yeah. Can you check this? Christopher Blaine throws this on there, kind of reference to what we were talking about with your daughter before we jumped on the stream about how you're seeking some exposure for her. That's kind of cool. That's a good question. If you want to take it, and then I'll follow up on that question from Chris.
Yeah, it says, have I checked out the 529 accounts? Are those custodial accounts? I know there's different minor accounts.
No, so the UGMA is the
Mhm.
Uniform Gift to Minors Act. And I
Mhm.
think if I had it to do over again, I would probably opt for a custodial account. I just like the freedom and flexibility of it. I would probably just drop them into VTI, you know what I'm saying? And just buy that ETF for my kids because they're so young. Now, my two young kids, being the offspring of the Independent Investor Channel, have some pretty robust portfolios. I will say that. I don't disclose their portfolios
Yeah.
online, but they do have some serious money put away. But they are in the form of a 529, and there's some penalty surrounding. There's 5 protected categories, of course, college expense being the real reason why people do the 529s. But it's actually in their name. I believe we do have custodial over that until they reach the age of majority, which will be, but they can use that for college. They can use it to start a business. Medical expenses, some people don't understand. But I think, again, if I were to have it to do over again, my brother actually, for his daughter, did the UGMA account. And that's something that's really underutilized and very underappreciated in finances. But do you want to comment a little bit on that, about what you've done?
Yeah. So initially, I did want to do a custodial account for my daughter. The only thing is I want her to do good and not just say my mom's going to give me X amount of dollars when I turn 18, and for her to do something crazy. I have full confidence in my daughter that she's going to be a good child, but I just want her to show me first, and that she's going to be, investing in her future with either education or doing other things. So I did create an individual account, and I plan to transfer it over to her when she's 18. And then if she does everything correct. So I think it motivates her a little bit more to make sure she behaves and does everything properly. And then I'll give her that, because with the custodial account, you have to give it to them at 18. So I don't know, I'm kind of like on the fence about that one, because I do want to do like a custodial account. And I also think I need to look into custodial accounts a little bit more, or minor accounts, because my only fear is if she won't get as many scholarships, or I don't know, other opportunities that other people do, because they see she does have that account. So I'm still trying to figure out what I'm going to do with her. But for right now, that's what I'm doing with that individual account. And then I plan to give it to her when she turns 18.
That's pretty awesome. I just always looking out for the kids. I always ask my son just randomly, okay, tell me what a dividend is, son. He's 8, and it's kind of funny to hear his little explanation to me. You know what I'm saying? I don't expect too much, but it's pretty awesome.
Yeah.
I just
my daughter too. She's 9.
I just think our culture, I don't know if we're focusing enough on financial stewardship in all seriousness. I just think, we enter into our 20s having had very little exposure to finances, and especially the stock market. And I don't know if the stock market discussion is really that prudent for our younger folks. In high school, I have my own opinion about it, which I would be more of an advocate of from an awareness perspective, understanding what makes things go in the market. But we're extremely deficient. And, when I was in my 20s, I was set in my ways. So, I wasn't hearing anything from anybody about what it is I was going. That's why I made every mistake in the book, But, I guess to each his own. It's pretty funny. So,
Yeah. I don't know. I feel like the schools don't teach a lot about like finances and stocks, because I don't know, maybe they're fearful it'll affect the economy. Like savers are not good for the economy, or they won't get in debt and things like that. So I don't know if that's why they don't teach it. I really don't know, but it's really sad. I think they should be teaching that to people when they go to school. And I think they teach like maybe one lesson or something, but it's not enough, and it doesn't get people interested. And maybe they need to find a lot more an activity that it's a lot more fun to do than the way they teach it. So I don't know. That's why I think maybe they think it'll affect the economy in the future if everyone becomes a saver and knows what to do with their finances. But
I know. In a consumer-driven society, nobody saves. Nobody anymore. There's 14,000 of household debt now on average. $14,000. I don't even like. It's hard for me to even believe that. You know what I'm saying? It's just amazing. But so one of my good friends on the channel, Lydia, and I know she'll kick over and subscribe to you as well if she hasn't already, is all good. She's got a question for you. I think you'll have some fun with this one.
No, I am a buy and hold girl. So my M1 account is my set it and forget it account. I just put money in it and then I deposit it the next day into the market, regardless of how the market is doing. Right now, I am going to be rebuilding my portfolio in TD Ameritrade, but my plan is to have 10 really good companies in my portfolio. I'm probably going to put an index fund in there too, so it can kind of balance me out with my risk, because individual stocks are very risky. But I plan to put these 10 companies into my portfolio, and then every time I get paid, just build those positions and just hold them forever. That's my plan.
Yeah, I tell you what you said, there's some gold there for sure. And I know the Gen X Dividend Investor and Matt Money, some of these folks in our community that are rolling with some pretty sizable portfolios. And it's interesting to always see how they seek out their exposure to the market when they do their portfolio rollouts. It's really cool. I always contend there's no right or wrong way to seek your exposure. It should really reflect your risk tolerance, but there's a lot more to it. If you're rolling with a secure job, if you're rolling with a home, if you're rolling with the ability to take up roots in a specific area, and you've got some stability there. That I just mentioned that because I don't have that. I'm moving every 4 years. So that's a tough thing for me when I'm making my real estate decisions. It's
Yeah.
really interesting. But I tell you what, in retrospect, and I always try to keep in mind, if I'm a new investor and I don't know anything about the market, what you said about single stock investing being risky, I think is right on the money. I really do. And these guys are going to cringe. They will. They're gonna, yeah, hey, but here's the thing. Numbers are numbers. Okay. And numbers in the S&P 500, I think I was watching the Matt Money live stream earlier on, the one we had kicked on and show a little support for. And this discussion came up with regard to single stock being diversified and ETFs being the diversified option. And I think it's really, really important for people not to discredit the importance of diversification. And I'm not just talking about domestic diversification, I'm talking about international diversification. And I think all too often we talk about portfolio building and we scoff at having some fixed income in the portfolio. Now, for somebody as young as yourself and some of the younger viewers that come on here, it's probably not appropriate, I would say. Have a little fun, right? Invest in those single stocks. But I like your idea of putting a starting position in there, because that really could be your flagship ETF, and you only need one to start to build
Mhm.
and start to accumulate that baseline that I talk about so often, because it only takes one or two of those stocks to underperform the market to really drag your overall portfolio down. And it
Mhm.
sure is nice to have that passive baseline in there. I don't know, it just makes me sleep easier at night. And quite frankly, it makes me happy, and that's the way I want to seek out my exposure. I know they probably cringing and throwing tomatoes at me. Ryan's talking about fixed income on the collaboration, but I, I think it's worth, if we're going to be fair with regard to the financial discussion and portfolio allocation and what proper portfolio allocation would call for, it's the right and responsible thing to do to at least mention that as an
Mhm.
option, especially for some of our older investors in the community. I think it's absolutely fair. So,
Mhm. Yeah.
see, there's Matt. He says, I don't disagree. I'm good. Single stock is generally not for everyone. I knew it's so cool getting to know Matt for a while here. Pretty cool. I actually foresee him being part of our community. And he mentioned that a little bit about what I'm trying to do with this message. I just think collectively we can be very powerful. I really do. A bunch of self-directed investors gaining wealth for ourselves. Look, at the end of the day, I mean, wealth can be very powerful. It can give you a lot of options in the future, and for me, it's a lot more simple. When I reflect back on my life, I don't want to regret any of the decisions that I've made. Can you
Yeah.
speak a little bit about how investing is personal to you and what it means to you?
I'm sorry, what was the question again?
Just about investing and how personal it is for you, what it means to you, because I know you're not one of those investors that just invest to invest. I know it means a lot more to you. So, if you could speak a little bit about what some of those goals are, I'm pretty open with mine.
Yeah.
If you could disclose those for the group, that'd be awesome.
Yeah, of course. So I'm really interested in investing because I fully believe that you should be investing in yourself, and that's one of the ways you can do that. And I also don't want to depend on other people like when I'm older. So I want to be able to take care of myself with the choices I make now that I'm younger and I'm able to work. So my goal with oh, sorry, can't even talk. My goal is to become financially free. So if I do end up, for example, losing my job or something, I don't have to freak out and just and think the world is ending in a sense. I have something I can rely on. So like an emergency fund, my stocks, because I think I actually told you earlier that I was working at a place and at 10 o'clock I decided to quit because it didn't fit my needs. And during those hours of when that happened, I was freaking out a little bit. I was just like, oh my God, I'm going to have to sell my stocks. I didn't save anything. And I was getting really upset. I was lucky enough to get a job by 2 p.m. that same day, but that's not very common.
Incredible.
So the reason why I want to invest in stocks is because later on those dividends will support me. I wanted to use the drip program for it to continue to compound. But if I need to, then I can use those payments I'm going to get to support me while I try to figure out things in life. So that's why I'm so passionate about it. I want my daughter to learn because I want her to have that opportunity and for her to create that as well so she can be financially free. I just don't want to be forced to work a 9 to 5 all the time if I don't want to.
Yeah. So Lydia, let me press a little bit. And if you were going to scrutinize your own program, what would be one thing that you would, if you could just have a magic wand and wave it on the portfolio and money wasn't an issue, what would be one of those things that you would look to improve upon in the portfolio?
In my portfolio, well, one of the things I'm going to improve on is now putting an index because I did invest in those individual stocks, and that is a lot of risk. So I think that was one of the things. I also have to learn a lot more about what I'm putting in my portfolio, especially if I'm going to be putting just those shares in the future. So I am now going to be a lot more picky of what I put in my portfolio. When I first started investing, I looked at dividend yields, which is a little bit embarrassing. So I did get a lot of REITs, and they were terrible companies.
Yeah.
So with time, I think I've been now investing in more quality companies. So I'm just going to focus on quality companies, and I'm not going to care if people think I'm too conservative with the companies I'm picking on. So it's a lot more now. It's just I used to let the noise affect me, like people criticizing what I picked or that. I don't know. It's just I think how I'm going to improve is just balance myself out with the companies I put in and make sure I do put that index to protect myself. I am very competitive though, so I am going to be competing with the stock market. So I'll put that into my portfolio. I did beat it last year. I had over a 20% return.
Yeah,
So
exactly. That's awesome. That feels good. I came out with my outperformance video too, and somebody asked me, Ryan, was it worth it? And I was like, no, you know, but it's aligning your profile, your personal investment profile with what it is that you want. If you just want to buy index funds and just sit on and not ever be engaged in your program, then that'll work for you. But I think investors like myself and you, and I don't want to speak for anybody in the thread here, but there's a lot of pretty active investors. I'm just trying to take a little more of a concerted effort away from being so active because my criticism over my portfolio is that I'm too active. And had I did if I had this to do over again, see, when I started, I knew nothing about ETFs and index funds. And index funds are good. I prefer ETFs. I don't own an index fund. I do in the TSP, being with my military investments, but I just like the freedom and flexibility of the ETF and not having to pay that $19 charge and then it trades after hours. So there's a few aesthetic things that are a little bit different between the ETF and index, and I've found no difference between the holdings within. They're very comparable when you look at it. I just think in Vanguard sense, they've bundled up each product in a little different way that they sell to their customers, so really interesting stuff. So
I'm definitely going to do more research about index funds and ETFs because since I haven't been really involved in those, I haven't really done a lot of research. So I do need to get a little more familiar with it. I know VOO is one of the good ones, right?
yeah, so VOO it's a great flagship S&P 500 exposure, the large capitalization 510. I would contend that is a diversified product. And it came up again on Matt Money's live stream earlier where they were talking about some of the robo advisors, which I still contend for some people, that's a good option. People who have no time, just want to run it through their electronic questioning. It'll build you a risk profile and get you invested, half a percent of expense, and then they put it that they're good. But the VOO at 0.03. And I actually have a feeling that Vanguard may actually eventually push it to zero. I don't know. I mean, there's already some ETFs out there that would be on par, if not knocking on the door to being on par with the VOO. But it's a great product. It really is. It's provided some really nice performance. I think there could be a little bit of work there to supplement some other stuff, maybe a small cap offering maybe an international exposure there if you're looking for that international. And I've got that. I've got the emerging market. So it just gives you that much more broader exposure. And just with the click of a button, you can be exposed to those markets. The access to the market now is freaky scary. It's just so cool. And it's an exciting time to be an investor, in my opinion. But I think you'd be good with index funds. We just had about a 10-minute discussion on ETF index funds, and we did not mention mutual funds one time. And I think that's a sign of the times. I really do. You have any?
About $50 to get a mutual fund, and then they don't do as well as the market.
Yeah, it can. It'll incur typically an actively managed mutual fund will typically incur a pretty significant expense. And you're right. I mean, it depends on the amount of risk that they're taking within that mutual fund to create some level of alpha, and perhaps maybe some years they're able to do that. And those are the years that they're most actively advertising the fund as a fund that can create alpha for investors. The fact of the matter is 96% of those active money managers fail to meet the benchmark, that of which we've spent the last 10 minutes talking about, which is the S&P 500. So the more people understand that about their investment landscape, it'll simplify things so much more. They're not going to feel like they have to pick a single stock portfolio and they don't know anything about the market. They can just look at the top 10 holdings. That's why I mentioned that Vanguard website, because I know people are going to tune into this collaboration and they're going to be like, wow, those two were fired up about investing. Now I'm fired up about investing. And they're going to want to go to the shopping mall just for curiosity. Okay. They're not going to go to the compounding calculator that I insist every investor go to, but they're going to go onto that shopping mall and they're going to look. And what they can find there with a very easy, just a little bit of research, is to look at the top 10 holdings in the S&P 500. And that would be enough to say, wow, Amazon, Microsoft, Apple, JP Morgan, I'm looking at some of these and I recognize them. This is something that I can relate to. This is awesome, right? So, easiest entry for new investors. And I would contend, I posted the simple portfolio in the live stream on Friday. And that's a cool thing about M1 Finance, is sharing those pies. Do you do that? Do you do that much?
I do put it on some of my videos. I just don't remember all the time, but I think I will. My M1 Finance has been doing pretty well. It has double-digit return. It's like 26, and my daughter's has in the high 20s. So hers is doing really good. And I am not active in that at all. I don't mess with it. I just put my pie, I put my allocations, I put the money in, and I leave it alone. And it performs really well. I'm very pleasantly surprised with M1, and I really love that drip program. That's what made me go to M1. That's why I'm keeping M1. I'm not going to get rid of my M1 account.
Wouldn't have been without the assistance of the group to point out that M1 Finance actually is a portfolio reinvestment program. That's the cool part about it. So you get paid those dividends and it doesn't roll back into the underlying asset. It actually rolls back into the portfolio pie.
Yeah.
Kind of cool. You saw my sector spider ETF project that I've got. That's a little bit experimental in nature, but I'm finding out that is really interesting. Those fundings that go in there, now I've changed it to bi-weekly. So I do $25 every couple weeks in there, just for the fun of it. And I wanted to increase that funding because I think that there's something there utilizing that function in M1. There was some discussion on Matt Money's live stream as well, where he was talking about one of the other major brokers, and I don't know if it was TD Ameritrade. I think it was Fidelity. I may be misspeaking, but I know Charles Schwab is looking to do fractional shares. But they were talking about doing something like this, portfolio reinvestment type of a program, because up until now, M1 Finance is the only one that does it that I know of.
Yeah, I really like that feature about it because it just puts it all through all your holdings. And it's going to be very interesting if Charles Schwab does do those fractional shares, because I think M1's one of the very few that does it, or only one. I'm not sure if it's the only one, but it's definitely going to change the game for all those brokerages. They're going to have to step up their game.
You know, it's funny. I watch CNBC. If I was stuck on an island, that would be the only TV channel that I would ever watch. And again, some people are going to be like, "Come on, Ryan, geez," but but it is. And I actually watch the ticker. I don't really listen to the idiots talking so much. I'm actually looking at the ticker tape, to be honest with you, with the stock offerings. But did you see this comment that just popped in here?
That's so hilarious. He would be very angry that we talk negatively about mutual funds.
That's pretty funny. But anyway, I was catching CNBC this week, and I saw for the first time M1 Finance. They didn't say it out loud because when they talk about discount brokers, they mention Robinhood a lot because it was on the disruptor list, etc. But M1 Finance really doesn't get mentioned very often, and it was on the board for the first time on CNBC. And I pay attention to that stuff. And I think within our underground investing community, I think M1 Finance is kind of a crowd favorite. Would you agree with that?
I completely agree. And I really love that it gives you that Roth option. It's amazing. Like, and a lot of people don't even know about the Roth option in M1. And that's one of my favorite features. That's why I'm staying with M1 for my Roth. I had opened a Roth account before with TD Ameritrade like a year ago, but I never funded it just because of those commissions. Those commissions stopped me from going to all those brokerages. That's why now I feel like I'm so excited for TD Ameritrade. I'm too excited. I'm on that platform a little bit too much, looking at stocks and their numbers and the educational courses that they have.
So what you just said is super important. This is one of the hardest things that I teach upon on the channel, because this is one of the most common questions that I get. That's why I've asked you. I asked All Good on the live stream, because I take that information, internalize it, and then I turn it back to the audience. With regard to those little testimonials that I get, that data is incredibly important. Not only because the investing landscape is changing so often, but I insist that choosing the right broker can make your life so much easier, and you're not spread out all over the world. I would contend, and I know there's a lot of people who perhaps maybe have some heartache with my devotion to Bank of America. I know I've been through some poor times with Bank of America, but now being an elite client, it makes it a little easier. I'm so used to their platform, Lydia, and that familiarity with the platform is key for me in my success. And I think you're going to find that as well, by rooting yourself in with TD Ameritrade. So there's a reason to be excited. It's an account that you can see yourself with for a long time.
Yeah.
So that's super big.
It has everything in one place, because with Robinhood, I knew I couldn't trust its numbers. So I had to go look at other websites to confirm like the P ratio or just different things on there. And with TD Ameritrade, it's all there. It has all the research you can do. It has education. I can even do my videos from the app, because before with Robinhood, I would show people like how the stock market was doing, and then I would transition over to my Robinhood. Now I don't even have to do that. It's all in the app. So it's even just for making my videos is gonna be a lot better. And I can just stay in TD Ameritrade website for hours and learn so much.
Awesome. There was a comment that rolled in here. I threw it on here. IRAs suck. I'll comment on that real quick. So inevitably, where I foresee myself in reflection over my life is when I reach 59 and a half. I'll be looking back and scrutinizing, as I think most people do, with regard to the decisions that they've made over time, etc. Hey, if I would have zigged and maybe should have zagged over the course of my life, and nobody has a crystal ball, man. That's the irony in this whole thing, and that's probably what draws people into communities like this. But if IRAs suck, I guess I have a 401k type of account, not. It actually has a Roth option within it. So I think that's a real strength of my overall portfolio, is the amount of dollars that I actually do have tax protected. Now, as well as I do, you've been with me a long time, Lydia. I don't stop there. Okay, tax protecting money isn't the end all be all. You're not done, because if you take that IRA and you attach it to a managed account, you're going to suffer over the long term by nature of the fees that they've been able to extract from those those rights of individuals. That's the way I look at it. But certainly with a joint brokerage account, a 401k, 2 529 plans, 2 discount brokers, M1 Finance and First Trade, and a partridge in a pear tree. If you don't like IRAs, there's certainly other options out there for you. And that's the cool thing about it. I opt for just 2 Roth IRAs of the self-directed nature. And I don't split up my Roth contribution. I just keep them pretty clean and streamlined in 2. But the thing that does suck about them, to be honest with you, is you eventually increase in your income and you'll run up against those income caps, those contribution caps. And that's the time right there. And this is the big, big takeaway that I had for my evaluation on Robinhood initially, not having the Roth IRA, but getting so many people started in investing and having them opt for a taxable brokerage account, right? And I think it was putting the horse before the carriage. I think it was investing in the wrong order. And I think there were millions of people that were subject to that. Now, if you get involved in your Roth IRA and you're maxing that out comfortably, certainly start as many brokerage accounts as you want, right? I've got 4 of them because I do run up against those caps. But I did want to address that comment for sure. That was fun to answer. So one great way to make money to sell OTM strangles. Awesome. I'm not into options just yet, so not really in my expertise. I'm evolving as a stock market investor. I know you're doing the same. We had talked before the stream about the importance of that, so pretty cool stuff.
Roth because it makes you disciplined. Like that's the only portfolio I didn't cash out because I know there would be those tax implications, and it just keeps you consistent with investing. So that's why I really like the Roth, and I like right now I know what taxes are, the rate. I don't know how it's going to be when I'm older, so that's why I went with a Roth IRA. I'll just pay it now, and then I can just build my money and not have to worry about taxes when I cash it out. But everyone has a different plan, and different things work for them.
Yeah,
So I
especially
love Roth IRAs.
yeah, especially the high income earners, certainly over 130,000. It's, you're not eligible to contribute anyway, so your decision is made for you. And you'll have to search out your opportunity elsewhere. So good stuff. That's why we do these discussions. It's a lot of fun. I've got Investing Wisely as well. I don't think I gave a shout out as well. Investing Wisely also has been a staunch supporter of the message for many, many moons. So certainly want to give an appropriate call out. Thank you for coming on here, man. I really appreciate your time. That's awesome. So do you have any questions for me, Lydia, by chance?
Yeah. When did you start investing, and what motivated you to start investing?
Oh, wow. What a good question. Oh my gosh. I probably started around 18 when I legally could, and it was through mutual funds. I did everything wrong. But really what got me convinced about the power of investing is when I had the rule of 72 explained to me at 15 years old. Now, we grew up in the country. So this was a financial planner that did mobile financial product sales in a car, would come around and do home consult, and I just sat there with like this, like, well, how does that work? So I spent the majority of that night figuring out how to explain the rule of 72, not necessarily how it works, but yeah, I've always had an affinity for investing, but what a long and winding road I've taken. My path was similar to you as well. I bet it was around 28 where I liquidated my mutual funds as well because I was over levered to the market. And what I learned through that lesson is never become over levered to the market. Never. I'll always try to have a cash pillar. Reflective of your income, reflective of your age. If you're younger, you can take more risk, but there's never anything wrong with keeping some cash on the side for a rainy day. Investing doesn't have to be the end all be all. And now with the market at an all-time high, ask yourself what type of levering do you want to have to the market now? But yeah, it was a pretty young age when I started, but I tell you, it's been in phases. And I think if you could eliminate some of those roadblocks along the way and just keep your path consistent and not change as many times as I did, changing brokers, changing philosophy, changing products, mutual funds to more mutual funds, to more mutual funds. And then finally I got my first single stock. My first single stock at the time was Kraft and AT&T. I bought them at the same time. At the time it was Kraft. And that was the first time I had dabbled in single stock. And for me, it was scary. I was like, I had all these preconceptions that it was like, oh my God, I could lose all my money, you know? I don't operate that way anymore, but that's a pretty awesome question. Thank you. I appreciate it.
Can
So
I ask you one more?
you can ask as many as you'd like. That's the beauty of the live stream. That's rocking. Yep.
How did you handle the crashes like in '08 and the 2000 bubble? Like, what did you do during that time when you saw your capital just drop?
I didn't watch the market. Simple. I wish I could just sit here and tell you that I deliberated over it and I stared at the screen and I hoped really, really hard and I meditated over it and maybe I prayed about it.
To
You
stop
know
that?
my, you know my posture about all this, right? So here's the ironic part about that. And I know Matt and Gen X and Dave and all these hidden freedom investing folks that have been around the block and have been through these downturns can speak about how unfriendly they are. Okay, they're not fun. They're not. Watching your hard-earned dollars, you know where I come from. I don't come from money. Everything that I declare over YouTube, which is hopefully why a lot of people resonate with my message, and that's why I think a lot of people will resonate with yours as well, is because we've come from, we weren't given, we've worked for, and that's great. But yeah, it's humbling. My scenario that I walked through on the Friday live stream when I talked about losing 90% of the value and this and that, I really think that that is indicative at its core, lack of preparation, both
Mm-hmm.
mentally and physically in the portfolio. I think if your portfolio is prepared for growth and prepared to incur a downturn, then I think you'll be okay. And there's going to have to be a time where you're going to have to just trust your program because you'll hear me on the channel where I'll remove the right to sell, at least for me. I'm not your dad, right? You can do what you want over your portfolio. And I will say this, we will lose people. We will. Okay. So you think things are all roses right now while the market's going up? Yeah, a few thumbs down here and there. It's going to get ugly. Okay.
Yeah. The only dip I experienced was last year in 2018 in Christmas Eve. The stock market had dropped so much. There was actually this girl I would talk to all the time at my job, and she would think I was so crazy because I was like, wow, like I haven't seen Visa at this price. I haven't seen Waste Management at this price. I haven't seen this in a long time. I'm so excited. And then I would keep buying and buying and buying. And before that happened, my gains were at 20%, and the stock market dropping so much, it ate all my gains. And I was still adding and adding and adding. And a couple months later, the stock market bounced back and it hit new all time highs. But yeah, you just have to trust what your research that you did the appropriate research and you invested in good companies and see it as a good opportunity to increase your positions and do it as fast as you can.
Yeah, I just think that that's such prudent advice, but I would put that in the category of the easiest advice to give and some of the toughest to follow, because investing when everything is roses in the market is easy. This is great. This is awesome. I tuned into this guy, Independent Investor Channel. He comes on Friday, talks about adding a little bit every month. This is lovely. You get involved and you go through a week and you've made like $12. This is the greatest thing ever. I want to quit my job. This is lovely. And it just comes through lack of perspective. That's why I always try to talk about both sides of the coin with an attempt to try to prepare people as best as we can. That's why I had such a quick answer for you. If I were to say, I don't know, maybe this and maybe that, but it's not very fun to go through. However, as an opportunistic investor, I will remind myself of my plan to be long and fall on the defensive nature of my portfolio as I've built it. I don't feel like I'm over levered. I do feel like I'm aggressively invested. Okay, there's a difference there. And I spend a lot of my time really just doing that, calibrating my exposure limit. What am I comfortable with? Can my portfolio go down 50% right now? How would I feel about that? Am I okay with the amount of accessible cash that I have to maybe take advantage of a downturn? And then at that point, you're just a monitor of the market. The market's going to do one of two things, and you're prepared for both scenarios, not just one. And I think that's where a lot of people fall victim, as they get lured into this. Oh, this is lovely. Every stock I invest in goes up. Well, in a downturn, every stock that you invest in will go down.
Yeah.
And
Yeah, everyone thinks they're very smart right now, especially because the market's going up, but you really test yourself when it goes down. Like, what are you going to do? And did you really prepare yourself for it?
yeah, it's tough too, because there's a lot of new people, money that is coming in. I alluded to this on Friday, a lot of new money coming into the market. Like, holy moly, I've been watching it for 10 years and it just won't go down. Maybe I need to get involved now. Those are the folks that I do worry about being the most ill prepared in enjoying some of this appreciation and having the fortitude to take their money into a downturn with such little time in the market, right? Time in the market's key. So not timing the market, but that's a super good question. That's the best answer I can give you, because I know how important the answer is.
Yeah.
Because remember the oath that I had everybody take on Friday? I promise not to sell. You know what I mean? And it sounds stupid, but each and every one of us will be faced with that test,
Yeah.
and we'll see who comes out on the other side. It'll be fun to watch. I know where I'll be.
I'll take the same oath. I will not sell my stocks ever again. No, I have no excuse. I have no debt. I won't do it again. It made me really, really sad selling my shares. But it's okay. I'll build it back up.
Check this question out from Matt. And I want to answer this question from the perspective of a self-directed investor, because the beauty of the self-directed program, and I talk at length about the differing opportunities that you have as a self-directed investor, as opposed to sitting down with a planner who's going to look at your money and they are going to undersell the importance of having a cash pillar, because they're at an impasse. Okay. They get paid based on the amount of money that they bring into the brokerage firm. Okay. And so if you're ill advised or ill prepared to take in, let's say you've got $50,000, you've never participated in the market, but you don't know a whole lot about the market, and you sit down with the planner, they are trained not to look at the current condition of the market. They are trained to bring in as much as they possibly can. Okay. That's what they're trained for. And there's a real disconnect between how much over levering that creates for investors that shouldn't be levered that much to the market. Because there's no financial planner that's going to sit across from you and say, yeah, Matt, you've got that $50,000 that you want to invest. Why don't we put 10,000 of it to work and put 40,000 aside and start yourself on a nice dividend reinvestment program, that of which they get paid for, right? And also set those funds up for dividend reinvestment program within the fund, that of which they also get paid for, right? But think about that. What is their incentive to encourage individual investors to keep a little cash on the side? So his question is, how much percentage of the portfolio needs to be on the side? I don't abide by the 6-month rule. I have significantly more than that, and I'm totally fine with that. I don't look at my cash pillar as being something that I'm missing out on the market, right? I don't say, oh my goodness, had I just invested that in the market, I'd be up X percent. I don't think about that. I keep those two pillars completely separate, and I keep my bucket separate. So a percentage, whatever makes sense to you. I think now is a time where you should be a little bit more aggressive on building the cash pillar, just because what the market's telling us. It's at an all-time high. I don't know where it's going to go, but what is it telling us now? So what is that telling you on how aggressive or how maybe defensive you should be? I'm a little bit more in the defensive camp. That's all. I could be wrong. I could be right. But at least I'm making a stand and making strong moves in the market. If Matt has an idea and wants to throw kind of a rule of thumb in there, I know Ramsey has 6 months of expendable cash, right? If you're in between jobs and it takes you more than 6 hours to get a new job, like you, no, there's probably a rule to that. But yeah, I've got a significant amount of that sleep easy cash aside, and I look at that as my fitness and preparation to be able to capitalize on a move, no matter where the market goes. That's my long answer. Do you want to take a stab at that one? What's your thought on that?
With cash, I think it
Yeah.
is important to have a cash position, just because you never know what's going to happen. So the stock market can be at an all-time high right now, and it can keep going, but you don't know. And if it drops, if you have that cash, then you'll have the opportunity to buy a lot more shares at a very good price. It's also good to have cash on the side too, because you never know if you're going to have an emergency. Like, what if your car breaks down, or what if you need to fix something in your home, or I don't know, medical expenses that are unknown and you have to meet a deductible or something. So it's always important to have some type of cash to protect yourself, because right now you might be healthy, right now you might have a stable job, but you don't know what's going to come tomorrow. You never know if that job's going to go away. And you might not be lucky to get one as fast as I did. I don't know how I did that. And but you just never know. And it's better to protect yourself. My boss always says, when you don't prepare, you, what does he say? Oh my God, I love this saying and I can't remember it. When you fail to prepare, you're preparing for failure. So it's always good to prepare yourself. Otherwise, you're going to be in shock when something bad happens. Like right now, if I have to pay my tags, and my tags are really expensive. They're like almost $500, but I can go in my cash and then I can pay that, and I don't have to worry about, oh my God, how am I going to pay for this month because I forgot to save for this. So it's just better to have some cash on the side just in case.
Yeah. When I answer that question, I always try to frame it in a way to make people think about the options out there. And it's just one of those real selling points. And you've known me for a while. I don't try to sell anybody anything, but I do want to create a fair awareness on how differing the two paths are with regard to managed and self-directed investing. And that's just one of those things that I really like to ping on. So I appreciate the question, Matt. I really do. That's a good one. Really good question. So, hey, Lydia, we're going on about an hour and a half. Do you want to go for another 15 minutes or so? What do you think about that? This is
Sure.
This has been a rockin' live stream.
It's been an hour and a half. It feels like it's been like 15 minutes.
Typically like that. I told you it'd go fast. We haven't really got to a lot. I've been trying to throw some questions up there and really engage, but I think these take a little bit more of a life of their own when there's another channel creator on here. I really want to get into a back and forth, a Q&A. That way the folks that come on can benefit from your perspective, because there's no two perspectives the same. I enjoy it. That's why I asked the question. So I'm always curious to hear your perspective. But let's finish out strong at 15 minutes. But I will take the opportunity certainly to thank you for coming on. Ironically, this is my first collaboration on the Independent Investor channel. Now I've done other collabs, but it's always been sponsored at the hands of some other channel creators as well. This is my first one, so I was a little bit curious. So thank you for helping me make it such a success. I think we've touched on a lot of beneficial topics. I think if I was a new investor sitting back, I would be like, wow, this stuff is legit. Wow. So thank you. And I will absolutely thank everybody that made their way into the group for sure. Always the heart of at least my channel. And I don't want to speak for yours. I know you have, where you put benefit. We talked about that a little bit, but this is one of those topics. It allows me the opportunity to talk about my favorite topic. But the strength of the channel, at least from the perspective of the Independent Investor channel, is the folks who take the message and kind of empower their own lives. People that wouldn't have otherwise found the information and would have lived their lives and probably would have been fine, but perhaps maybe separated that predestined path to something greater. I just think that's very powerful. Do you want to offer some closing comments, and then we'll finish out if you want?
I want to say thank you for having me here, Ryan. You've always been very supportive, and I feel very special that I'm the first one to be on here. And you've motivated me a lot, and I've learned so much from just your live streams. And I really love every Friday you motivate me. Like I said many times, you motivate me to get off work early and just to be part of your community. It's very special to me, and I was very surprised when I was on your featured channels, and I thank you so much for that. And you've been so kind, and you help so much people out there that have a lot of questions, and it gives them the opportunity every Friday to talk to you live and answer their questions. And not a lot of people take the time to do that. So thank you so much for that. I really appreciate what you're doing and the message you give to people.
Yeah, you're very welcome. And just a little bit of backstory. It was kind of funny, but when I reflect back on my YouTube journey, it's been interesting. I go through ebbs and flows. Okay. I can't stay ultra motivated all the time. That's just not my personality. So I go through ebbs and flows on the channel. But when I first started, I had somebody who kind of took me under their wing a little bit and provided me that referral that I feel like I'm providing for you and others. You're not the only one. But a few things that I picked up, your insistence upon the importance of investing, what it meant to you. So even though I picked up on your channel when it was very small, I believe it was very small, and I didn't get to comment on how much you've improved on your delivery. I know I had to comment because it's just something I picked up on. It was a constructive compliment is the way I wanted you to take that, because I do think whatever hesitation that you have about putting yourself out there, the quicker you can get over that, the better off you'll be. And I do mean that for sure. But yeah, I was provided that referral at some point, and that's kind of the way I'm really aggressive about some of these new channels. I don't get to all of them, but when I see something special, I really try to gravitate. Some of the really new channels, Matt Money, Gen X Dividend Investor, JMac Investing, some of those folks that they're really good. Having some fun, building the community out. I think that's really fun. But I'll comment to this. We can finish out the live stream. Certainly. I'll try to go for minute 45. You know me. I can always try. What's the Independent Investors channel about? Well, I will say this. I've probably spent more time behind the scenes making pennies on the dollar, with about 350, 60, 80, who knows, 380 videos at this point, chronicling that very answer to that question. And I think for me, it was the discovery of prospects of self-directed investing and how I felt when I was introduced to it. And I was surprised that it even existed, because I had operated on the status quo for many, many years. You just had to go in and seek out representation from a financial planner. Remember how I talked about the little old fella with the briefcase who drove to my home when I was 15 years old? See, that was my perspective about what you had to go through to access the stock market. And I wasn't that far off at that time, really. If we wanted to seek access to the market, we had to go into the little town that was not the country and sit down with somebody in their office. And that was what we defined as being the only option in the market. That's how you sought your exposure out. So when I got involved with self-directed investing and I was able to monitor the power of the designation over the self-directed account and differentiating between those two products. Most people don't know that there's a differentiation between those two products. And if I'm answering this question and you're listening to my response, I could change your life with this answer. But understanding the difference between those designations and how powerful it is by putting products within that account that are allowed to grow unobstructed without the interference of fees over time. And just over the last 8 years, I offer the Independent Investor channel as a testimonial to show that an individual like me on a blue collar salary can build a $500,000 net worth by following those principles. Most people don't understand what a liberated dollar looks like within an account. They don't. And if I could provide that level of awareness to let people know that those options are out there, very powerful. For the ones that want to listen, you have to open your mind and you have to want to listen and evolve for yourself. I know what it means for me. And good on me for coming on and providing a referral because, like you said at the top of the live stream, I don't think a lot of people really want to do that. I think a lot of people are looking for their own and they're looking to get theirs, and that's it. But when it comes to like helping people, that kind of gets kicked to the wayside. You want to take a stab at that, Lydia? Well, I mean, you've been a self-directed investor your whole life. You said you haven't been with a planner. So, I mean, can you comment on that a little?
I think now there's a lot more resources for you to invest on your own and not have to pay other people to do it. And I mean, the stock market itself has outperformed those hedge fund managers and those advisors, and they're not in it to help you in a sense. Like, they're there to make money. They just see you as a product and how they're going to make money for you. So I think just what Ryan tells people, that for you to do it yourself, it's amazing. And then so it says it on his channel, independent investors. So it's really great that, you have to, I think it's better to be independent. I did have one account, a retirement account, and it was managed by someone. And I think it gave me a 1% return. And that's how I funded my M1 account for the first time. I got out of that and I funded it in M1 Finance. And a lot of people just don't know that that's available to you, or are scared to start investing on their own because they think they're going to fail. And I think Ryan gives people that motivation to, you could do it yourself, and there's different ways that you can do it and you can still succeed. You don't necessarily need someone to tell you. And they, like I said, they're not there for the best reasons. They're there to take your money in a sense. And you can handle it yourself.
It took me a long time to realize that nobody knew me better than me. Does that make sense? And I think so many people try to go through and they deliberate through an exercise of Q&A. What's your name? What's your social security number? What's your favorite color? And the financial planner doesn't know you for squat. You know you. And with just a little bit of education and a little bit of tutelage, you'd be amazed at how you can use your own deficiencies and your own desires and your own financial goals to build a comprehensive portfolio without the assistance of anybody other than the resources that Lydia is talking about. That level of access has changed over time. I wasn't kidding about the level of access. I have paid $50 for an entry fee to a stock. I paid $300 to exit the same position. $350 to enter and exit Duke Energy. Real story. So just a little appreciation from some of the younger community that can come in. And if you don't believe me, certainly ground truth the information. But it's the truth. I've paid those, took the tax deduction. You can tax deduct up to $650 of trading fees. And I was actually over that with Edward Jones. And I thought, man, I need to trade more to get the tax deduction. Look where we are now, Lydia, with unlimited free trades.
Yeah.
It's just it's an exciting time to be an investor. It really is. But with that said, I do want to thank the group in here. There was a few folks that made their way in here that I did not recognize. A bunch of people are some very loyal followers, probably to myself and you as well. If you are not a subscriber to Lydia Santiago, The Investment Journey, and if you are not a subscriber to the Independent Investor channel, you're missing out. You're missing out. The time is now. It doesn't take anything to hit the subscribe button and subscribe to the message. Give it a little bit of time. If we haven't won you over for free, then turn the channel off. Seek your opportunity elsewhere. I have no qualms about that because there's so many different personalities on YouTube that are offering investment testimonials and awareness pieces. I would contend that investing is for everybody. I really do. I think everyone should at some point look into the prospects of what investing could mean for you. And these channels, a lot in the group here, can help you do that. So Lydia, I'll give you the floor for the last comment if you'd like, and then we'll sign off and carry on with our weekend.
Yeah. Well, I want to thank everyone for joining. I was very excited for this live stream. And I do want to say that there's a lot of channels out there, but a lot of them lack authenticity, and you don't really know why they're there, why they're on YouTube. A lot of them just want to make money. And I think what makes me and Ryan different is we don't really care about the money on YouTube. It's more of reaching out to people and motivating them to start investing and just letting them know that they can do it on their own. And we're here to help if you have any questions. And it's one of our passions, at least one of mine, to be an investor. And it's just great to have a community that you can talk to. And if you want to talk about a certain stock or certain things, you can reach out to that community and talk to them. So I want to thank Ryan for letting me do that in his channel. And
Welcome.
I'm more than happy to have those conversations with everyone. I mean, I call people on my channel, they're my stock buddies. I don't have them in real life, so I appreciate it, every single one of you. Yeah.
Awesome. We're right on about an hour and 45 minutes, Lydia. So thank you again. Thank you to all the community members, guys. Just a quick announcement. I will be back on probably Friday for live stream 74. Everybody is cordially invited. Anybody who's attending from my Facebook group, I also want to welcome and thank you for your attendance. Again, stay tuned for some uploads this week. We're going to finish out the portfolio reviews and a few gems in the making as well I've got ready for upload. But I want to take this opportunity. Happy Thanksgiving to everybody this week. Be safe, please. Enjoy yourselves, enjoy your families. That's what it's all about in the end. But thank you for this opportunity to engage in this financial discussion. I hope you got out of it as much as I did. So thank you so much. And we'll be signing off right now. Thanks, guys.